Check, check, check. All right, can you hear me now? I think you should be able to hear now. Apologize for that. There was an update to OBS. I think that must be what it was. And you know what's stupid is that like I literally every time they remind me of this update, I always hit remind me later. And like last week when I was filming that data recap video, I had updated, and of course it bit me in my butt. What's up, Cook? Kevin? I was saying hi to Kevin. You probably didn't hear me because that was before I knew I was on mute. What's up, Steve? Get her done. Guys, yeah, and if you're wondering about I'm trying to sweat this out. I'm super sick. You're probably gonna hear me coughing throughout this whole thing, and I apologize. My whole family has been sick since about Friday evening, and I was the only one that wasn't sick. Even my dog was sick. It was funny. So I've been trying to like take care of my family and nurse them back to health, and this morning when I woke up, it had finally gotten me. So now I am sick, and it sucks, but we'll get through this, and hopefully by next week I'm good to go. Yeah, it is Dragon Ball Z, guys. And if you didn't know, I am a huge Dragon Ball Z fan, so, and I'm not embarrassed by it. So yeah, I'm gonna be drinking a lot of water during this live stream, and hopefully I'm gonna try not to cough too much. But again, apologies if it gets really annoying or too much. Just about another minute and we'll get this started. Steven, get her done from TrueTrader. While I have you guys on voice, just a heads up, like, so Steve, I always post the homework, the list of names I'm going to talk about for this coming week ahead of time in TrueTrader, so people can try their hand at seeing what I see, right? And they post their own answers in TrueTrader, and some people, like, you know, really put the work in, and it always shows. I love it. So like, shout out for putting in the work. If you guys are in TrueTrader and you know, see me post like homework or whatever, and you provide answers, it goes a long way. It makes me happy that you guys are putting in the effort, right? But one little piece of advice: remember, like, when I attack these Sunday preps, you know, like, if I give you a name that I'm looking at, I'm typically not looking at both sides of the trade. Usually the trades I'm trying to point out in the Sunday prep are trades where I have a directional bias, meaning, like, obviously, you know, something could be extended on the daily. Obviously that might have a level where if it flushes, I would like to long it, but really the take I want to have is that, look, this is getting extended to the upside. I'm looking for those short levels. I really don't want to be focused on buying a flush on something that's getting extended to the upside, right? So yes, there's tons of trades where throughout the week you guys will see me take these trades, and I you know, I might be unbiased. It's just playing the price action. But with the Sunday prep tickers, there's almost always, I want to say almost so that I don't use these superlatives, but like, there's almost always a directional bias. So just a heads up on that if you guys try to do the Sunday prep homework. All right, so we are at the 5 p.m. market time hour. Let's get this started. Again, I'm going to try to fly through this because I'm not feeling good at all, guys. So bear with me. All right, if you don't have a broker that you guys can trust, this is the one I recommend. Honestly, hands down, best customer service you've ever seen in a broker, and I've been at them all. There is a link in the description. It's going to save you guys on your commissions. It'll also get you 1 month free of whatever platform you choose. Check them out. You won't be disappointed. Spikeet, if you guys don't know about them, these guys create a platform that allow you to pull historical data on all kinds of data points for stocks. If you see an edge or you think you see a pattern in the market, it's not enough to just have a hunch, right? You need to have statistics to back it up. These guys cut that time element down from what used to take months to track to literally within a day you could have a statistical edge. And in fact, I'll talk about them a little bit once we actually get started with the prep, because I use them a lot for more than just testing, back testing edges, right? Scriptstotrade, these guys make indicators for Thinkorswim and TradingVue. They also write algos for like NinjaTrader They sell you a subscription-based package where you get a whole suite of really, really powerful tools. If they don't have a indicator or tool that you want, reach out to them. They'll work with you to create whatever that vision you have is. They're really good at that, and these guys can pretty much, if you can dream it, they can make it a reality. Okay. TraderVue, these are who I use. This is the company I use to track my performance metrics. If you're not tracking your performance metrics, you're playing yourself, hands down. There is a link in the description for them as well. They actually allow you to track your metrics. If it's less than 100 trades per month, you can do it for free. There's obviously different tiered platforms for more bells and whistles, but check them out, because like I said, if you can't measure it, you can't manage it, guys. And of course, as always, there's quite a few names reporting this week. A lot of the Chinese names are having their numbers come out this week, so make sure you're familiar with who's reporting. And actually, I also wrote down, make sure you also know your economic numbers that come out this week. That's important every week, right? But you don't want to be blindsided by stuff. Like last week, we had the ever important CPI. Tuesday, we have PPI numbers. Wednesday is retail sales, and then Thursday is the job numbers. So make sure you guys know what time those numbers come out. If you guys, actually, I'm sure Raul will probably post a link for the Market Watch economic calendar in the chat here in just a moment. So that's it. Let's get into the disclaimer. Guys, as always, neither I, TrueTrader, or any of our associates are not registered as security broker dealers. I'm not a licensed financial advisor. Anything you hear me talk about is strictly for entertainment purposes only. It's not a solicitation to buy or sell any stocks. All right, guys, so here is, I don't know why I'm not centered in the camera for this thing, but whatever. Like I said, I updated OBS, so bear with me, guys. Let me move some things out of my view so I can check out these charts with you guys. I'm going to just freestyle the broader market for you, and then the same with the ETFs, and then we'll get into the ideas. There's a ton of ideas, so I'm going to try not to spend an exorbitant amount of time on each one. I'm going to try to keep it really succinct, but we'll see how this goes. So last week, especially Thursday and Friday, right? After those CPI came out on Thursday, we've had a big 2-day rally. Last week and the week before, I kind of like came out with basically this thesis that, I do believe we're going to start seeing a narrowing of the range on the broader market. Remember, when we look at like a monthly, like all these monthly candles are really, really wide ranging candles. And, I think for a healthy base to be built, it needs to have some contraction in that range. We need to see things start to build a base and coil. And that's not just for the next bull market to start. That could also be for the next move down as well, right? Even if we build a base, push higher, but then put in a much more macro lower high, it could set the stage for a much more bigger leg down to really get things unwinding if that were to happen. Again, we always want to make plans for each scenario, but we also still want to try to be logical in talking about what we're seeing. Right now, this is the monthly chart, right? We could just easily build this range above the monthly 50 and below the monthly 20. And, as we go sideways, those two will contract. I mean, you can like look back to the previous times this has happened. And when you get those moving averages converging, it takes quite a while for it to happen, right? Because these are all monthly candles. When you start to zoom in, like into the weekly chart, right? Obviously, we see more noise, but it's still a higher time frame chart, right? A lot of people get really stuck on these intraday charts. A weekly chart does a really good job of removing a lot of noise. Not quite as much as the monthly, but you can see that this really could just start to build a base here and start to see that coiling of the price action as this big move down from highs. I mean, it doesn't look that big, but from the all-time highs, right, we're still trading down 16%, and at the most, right, we were down 27%. And so it is a big move down, and these kinds of larger moves do need time, almost always need time to properly digest before the next kind of chapter evolves. So I do still think we're going to coil and see a base be built, and like I said last week, that if that's going to happen, this is the logical area for it to occur. And so as long as we stay above the October lows, and below the, what month was this? The August highs, right? Below August highs, above October lows, I feel like we could just be range bound for a while. That doesn't mean we don't have trades, right? Like, especially if you're a day trader, it's a really great trader's market. We don't need to have swings on to be making consistent gains day after day after day. So I'm going to get into the more granular. This is your daily. Again, last week, one of the things I said was because of where we were, I didn't have too much of a bias, right? I came into the week ready to short rips or buy flushes. Either way, I thought there was plenty of support below. I thought there was plenty of resistance above. Now that we're pushing and getting a bit extended, I do start to come into the week with a bit more of a bias, right? Any pushes higher into significant levels, and I'm going to be leaning into the short ideas. I will have plenty of long ideas, but I don't want to express them until we pull back to better levels of support. Now, before I do dive into more of an intraday kind of area, I'm going to just use this daily here as a way to identify a few of these levels. The first is going to be this little area right here in this 39 what 15 to 39.25 little 10-point range right there. That level right there, which has been significant quite a few times, right? It was support here, got below it, and it was resistance. Now we're back above it, so that's the first level of support that I'm going to be using as long as we don't gap down anywhere near it, right? If we open flat to above, like gap up, that's kind of the near level for me. So now that we've established like the nearest level of support, at least that I'll be looking to play, now I'm going to kind of just jump into, I don't want to use a 20. Let's look at an hourly here, okay? And again, thankfully, I have my ever trustworthy friend Raul helping out in the chat. He's going to kind of notate these levels for me so I can mark them later, because I am just going to be freestyling these. So here's that 1320 area or that 3920 area we just talked about. Below that, I would like to see how we react when we come down to this quarterly pivot, which is going to be like a retest of this downtrending trend line, right? Which is going to line up really well with both the 20-day and the 50-day. I should have probably pointed that out while we were looking at the daily chart. Whoops. Sorry, guys. What is going on? There. Okay. Yeah, you do have the 20 and the 50-day right there, all in the same area. The 20-day is kind of curling up. The 50-day is flattening and is going to start curling up. So if this were to flush down into that quarterly pivot and right into that 20-day, 50-day level of confluence, that's going to be a big level of support for me. So that would be the next area, which we'll call it 38.40 down to 38.15 for now. Obviously, as the days unfold, that 20-day will start to creep up. Let's get back into the hourly. So then below that, we have this level down here at 36.40. You know, I may want to probably pay attention to this level down here. I think I had this marked last week as support, right? 37.20, I think is what we had. So 37.20 and then 36.40. And then below that, obviously, some much further away levels, 35.70 and 3500 on the dot. Above that, let's say we open flat to gap down. If we don't gap up, I do kind of want to, especially if we gap down. If we come down into this 39.20 area, it holds its support. I will watch for last week's highs, which is that annual pivot and that 4,000 psychological level as key resistance. If we open flat to gapping up, obviously that takes that out of play. But right above that, at 30 or at 40.80 area, you can see that quarterly pivot lines up perfectly with the 200-day. That's obviously going to be a very key level for me. Above that is going to be 41.75-ish. Let's call it 41.75. Let me make this auto scale. 41.75, and then above that, I'm going to be looking for 42.60. One of the things I like is when you have these uptrends, pay attention to this, guys. This is something you should definitely be learning how to do when you're looking technically at charts, and that is spot these uptrends like this and find where that trend finally does reverse and that first short trigger, right? So uptrend is just higher lows, higher highs this whole way up, right? Here's where you get that first pullback and it makes that lower high. Mark that crack, that level that cracked, as important, okay? So that's where I just came up with that 42. I think I said 42.60, but I was eyeballing it. Looks to be more like 42.55-ish. To me, that's an important level, okay? And so that's the support and resistance levels I'll be looking at this week on the ES. Remember, I'm not going to do a full analysis of the Nasdaq like I do the S&P anymore. I'm only going to make any kind of notes that I see worth mentioning that differentiate it. Everything does look good. The one thing that stands out I got to make sure before I say this, I want to check ES real fast too. Not so much as the NQ. The NQ really, this monthly candle in October. If you guys look at where I got this level from, those were the lows from September 2020, right? This little failed breakdown snapped back up, and since then, just these two big wicks forming back-to-back months, right? That failed breakdown is going to be, that's such a key level moving forward, in my opinion, right? So I definitely want to always, and I know that's probably like, hey, Captain Obvious, thanks for telling us that those recent lows are a very important level. But it's not an important level just because they're recent lows to me. It's super important because of the fact that it was that failed breakdown and we were not able to establish closes below that level that held. So I really do want to make sure that we put a lot more emphasis on those levels when we zoom into lower time frames, right? And in fact, look, it wasn't even just a monthly failed breakdown, right? Or even just a weekly. You can see that it was just on the daily chart. It was just one day, that one candle flushed out, and then it's been, holding ever since. So super important level, guys. All right, Bitcoin. I know a lot of people are probably definitely want to hear about this, right? Guys, obviously, if you're living under a rock, maybe you haven't heard, there's the whole FTX debacle, BlockFi as well, and it's basically a grenade that just went off in the whole crypto sphere, which is what caused this big move down, which caused us to break extremely key levels. From a technical standpoint, the one thing that just stands out to me is the fact that when we bounced, we were not able to hold a reclaim of that level. And so far, we are still trading under it. So watch if we were to lose the recent lows, because it could really start to unwind more. Let me zoom in to some higher time frames. And what's funny is, like, you don't need too thick of a tinfoil hat to just be like, man, was it just coincidence that this happened once we finally got back to what Ricky's been saying is that target for that trigger, right? We talked about the reversal. The target would have been the weekly 20. And remember, we talked about this level up here over 25K. What was that trigger? That was a separate trigger. That would have been what reversed us on the monthly time frame to get us back to the monthly 20. But we didn't ever trigger, no trade, no risk, no capital at risk. But when you're looking at a weekly time frame, we got to the target, and what happened? The author, Price, decided to continue the story to the downside. Now, I mean, you guys can call it coincidence, whatever. We see this happen all the time where news lines up exactly perfectly with some very important technical breaks of levels, and it just is what it is. But again, the path of least resistance is still to the downside, and with that much negative fear in this market, it could get uglier. I'm not saying it will. In fact, the old Wall Street maxim really does apply even into the crypto space, and that is, max fear is when you should be buying, right? Max fear is when you should be looking to put some capital at risk. But I don't know if this is max fear yet. That would be kind of my counter argument to that cliche, right? Is that I don't know if this is max fear. And the same goes for, like, when everyone's getting greedy, you should probably be selling. All right, so that's your broader market. We're going to hop right into the sector analysis. Let's head over to bar chart. Let's take a quick look at the short-term matrix so we can see the sectors, just the strength of everything. Obviously, green across the board, some very standout sectors, right? IT, 10% on the week last week. You had communication services, which has been like the weakest of the week, right? 9% up. You had two sectors here that did 7%. You did real estate and materials. Materials, we're gonna look at that one. So let's go look at sector by sector with the ETFs. I'm just gonna go one at a time, guys, and we'll just talk about them, okay? Remember, we talked about there are levels we're approaching as resistance. Look at where the 200 day is lining up with this annual pivot, and this very key level that we've put in plenty of times where it's been tested and shown to hold as resistance, right? So that 67.30 to 67.50 level on retail is going to be a spot where I think it is going to get extended and you might have some short plays. Think about some of the names in that space and some of the charts they've put in recently, like Nike, right? There's a lot of retail names that have some charts that are getting shortable. But you can't ignore the strength either, right? You should be definitely acknowledging that there are levels like dips back to the 20 day where if it were to offer those, they're probably good spots for longs as well. But I think at the moment we're extended to the upside, just like we talked about with the broader market too. Finance, another one. The strength in this one just getting right up in the levels we talked about. Really do think that it's due for a breather. If it gives it the breather, there's lots of support below, but I do think that there's some short setting up. Real estate, this is the one that had the a big week, right? And you got to keep in mind, context is everything, right? Even though it had a big week, it was really, really beaten down. So again, I think up into this, the yellow line here is a weekly chart or a weekly 20 SMA superimposed on a daily chart, right? So that weekly 20 is wrapping 40. You have a key level from back here that was tested, or not tested, but held as support before. We have not retested it since we broke. It lines up perfectly with that, and right above that you have your annual and monthly pivots, and 40 is a round psychological level. Now again, it's not one of those sandboxes I play in a whole lot, so there are a few names in there that have the liquidity and range which I may be interested in, but again, not a whole lot of single individual equities that I trade in this sector. Healthcare, I still think this one's behaving really well. It did have one close above that 134 level that we've always been pointing out. Whoops. Get off that. Let me draw this across. Yeah, it had one close above that level, but then on Friday it gave it back. Now keep in mind, Friday did have a tail put in, so if on coming early this week we reclaim that level and start to hold, I do think this could start to go. I think this is behaving pretty well. I think dips are good long opportunities. I don't necessarily think it's getting too extended like some of the other sectors. Let me take a drink real fast, guys. Like I said, thank you for bearing with me, guys. Materials. This one, very important. This Friday candle, this failed breakout, the break above that level and then the slam down and this like inverted hammer candle that it put in after having, look at the gaps in this, gap. Honestly, I think there's some names in this sector that are set up beautifully. We'll talk about it because there are some names from my list. And when we talk about those names, remember back to this chart so you can go, oh yeah, the sector itself looked like it was getting extended. Now look at these individual names. Industrials, another one pretty extended. It did break out of this. Whoops, did not mean to. Let me just undo that. There we go. Just wanted to draw that across. We did break out of this downtrend that it's been in, but it has not broken above the most recent of resistances, right? So trend lines are just visual guidelines for me. Again, I don't use them as like any sort of thing other than a visual guide. Support and resistance levels definitely mean a lot more to me than trend lines do. What matters to me is trend, not trend lines, but trend. I think that's a very key thing, a nuance that people should understand, especially if you watch my Sunday Preps and you want to understand where I'm coming from. When I say trend lines don't matter to me, I'm not saying I don't care about trend. To me, they're two different things. A trend line just means you're connecting a line that touches multiple points in the same spot, which shows that other people are probably seeing the same thing. Everybody's probably drawing these same lines. But it's very subjective because when a line doesn't work, you can always redraw it, right? You just be like, oh, let's put it here. And when that one doesn't work, oh, we'll put it here. But guess what's not subjective? One thing that is not subjective is whether a stock or any asset is making higher lows and higher highs or lower highs and lower lows. That is trend versus a trend line. So one is subjective and one is objective, right? So trend matters to me. Trend lines, visual guideline, that's it, okay? And like I said, this is not broken above this recent resistance level. Well, It's the last major resistance level that was tested that hasn't been retested since, right? So that's a key level. We'll keep an eye on it. I will watch to see if when we pull back, does it hold this trend line, or do we lose it and come back down here and test, you know, more objective levels, okay? Utilities. Again, it doesn't surprise me that we're stalling out kind of here. You got your 50-day, your monthly 20. The orange line on my charts, by the way, guys, is the monthly 20 SMA superimposed on the daily chart, right? So you got your monthly 20, your 50-day, all kind of converging right there, which is also kind of by this trend line here that we've had drawn. Again, I like to look at the weekly chart here and recognize that this, I think this level up here, the weekly 20 and the weekly 50 up in that 70-70 area, to me is going to be where I look to play the short side on this, more so than a retest of the underside of this trend line. Why? Because this level here that I'm pointing out was also this key resistance area right up in here. Remember this? That's why that purple box is there. I drew it back before I started using these pinkish purple lines. I just threw that box there a long time ago. It's been there forever. But that's why that level, my eyes gravitate towards that much more as a significant level than a retest of the underside of this trend line, okay? Staples, let me get back to the daily. Staples up into resistance. Your 200-day, your quarterly, this downtrend line, it's not as extended as some of the other sectors, but definitely coming in the levels where I'll be watching it. You can see Thursday and Friday, both days flush down right off that annual pivot, right off the weekly 20, the monthly 20, lots of support levels. So it's been holding. When you see 2 days in a row get soaked up like that, I think you're gonna eventually see this thing, you know, give way the other direction. So we'll see. I'm gonna be keeping an eye on it early in the week. Discretionary, I think this one, relative weakness in my opinion, but I will point out it definitely had that failed breakdown right on, was that Wednesday? Wednesday it closed below this line, then gapped up on Thursday and just went. But I do think it's got a lot of relative weakness compared to some of the other sectors. Now, these failed breakdowns don't really, you know, to me, it's not necessarily a failed breakdown until we come back over this level here where was the last major lower high, right? If we can clear that and then start to hold higher lows, then I'll start to look more so at this as a failed breakdown. Communication sector, remember this is one, again, just like I said with real estate, had a big week last week, but it's been super beaten down, right? So make sure you take it with a grain of sand or a grain of salt, whatever it is. God damn, I'm coughing, my lungs hurt right now. I still don't want to get long this sector. I still think definitely the first test of this resistance level up here, it lines up perfectly with the quarterly pivot. That last major lower high, I think any kind of push hard into that 52 level is probably good for a fade. Even if it gets through there, it has this other level here where this was that support that held, and then right when we retested it, you got that lower high, the break below, and then it just could never get back above it, right? So that to me is also another major level, and that's going to line up perfectly with that weekly 20. So definitely feel like I'll be looking to the communication sector for short ideas. Biotech, still think it's behaving beautifully. Obviously had a nice 2-day rally. I'm looking at all dips as support opportunity, or for scoop opportunities back into support in this sector. Technology, getting a bit extended. I'm thinking any kind of push into the underside of the 200-day lines up. Look at, you have your annual, monthly, and quarterly pivots all right up in that 140 to 140 area, lining up with that 200-day. I'm hoping, here's the thing, we don't get to, you can hope all you want, right? I hope it squeezes up there. I hope it gets up there without pulling back first, because that lends itself very well to A+ short ideas. If it pulls back early in the week, back to support, and then we start to grind up there, it's a different ball game, right? That's where, you know, okay, the move is more digested, it's more controlled, and lends itself a lot better to the long side when things are, when the bulls are in control like that. So I hope it's parabolic right up into that 140 area. We'll see. Energy and oil both still, you know, they gave perfect pullbacks to the daily 20. honestly, on these ones, when I'm looking for the long opportunities, I like pullbacks on the higher time frame charts, like the weekly. Those ones, we haven't seen the pullbacks, right? It's just kind of pulling back to the daily 20, holding and going. So, if oil gets extended up here into these recent highs, this 170 area, I'm probably looking for fades. Remember, these are two of the most objectively uptrending sectors that there are. Even though we've been in this bear market, oil and energy have had their own bull markets going for quite a while. And when that's the case, the path of least resistance is to the upside. So if you fade these, you don't want to overstay your welcome. Doesn't mean there's no shorts. There's plenty of short opportunities when these things get blown out and get way extended and get ahead of themselves, right? But if you don't like to short, or if you don't like shorting uptrends, then just have to be patient for the pullbacks to the levels where you feel comfortable buying. So that's the sector analysis. Let's get into the ideas. Like I said, there's a lot of them this week. Now, one of the things I told you I want to talk about, Spikeet. Every name on my list this week. So every week, I have to use different tools of mine to scan the market and find ideas. I have a whole bunch of them. You guys have seen how I use FinViz. I have all these screeners on FinViz, but I've created screeners on Spikeet as well, which is not what I don't think the creators of the platform intended it for. They wanted you to be able to backtest edges, see if there's a statistical probability of something, like if this then that. And that is one of the biggest strengths of that product. But it has these cool other uses, meaning like I am able to say, look, I want you to show me all stocks that have done this and meet all these criteria, right? And to me, I was like, dude, that's the perfect tool to create a scanner with as well. And so we've talked about a few of the ones I've made, the when short screen scanner, the failed breakout scanner. And so every single name on my list this week came from that scan. One of those two scans, actually, and the majority of them are from the when short screen list. Now, why on earth would there be so many names from the when short screen list? Well, when you have the broader market do this for the last 2 days, shorts are screaming, right? So it makes sense. Like it's a no-brainer. And if we continue to squeeze and all these shorts finally tap out and scream uncle, you're going to have some amazing short opportunities. You just don't want to be early. But it was a very, very obvious answer to me to go to that scan this week for the Sunday prep. So long setups, and guess what? Even these long setups came from that scan. Because guess what? In order for shorts to start screaming, stocks have to be strong. Certain stocks, even though they're strong, technically look like they haven't had that big move yet. And so even these long names came from the when short scream scan on Spikeet. Okay, so the first name, and this is for strong stocks looking for continuation, the first name on my list this week is MP. Now, obviously it's extended. I do not want to be a buyer up here. Obviously, if it were to keep on ripping, probably has a good area up in the 40 level for fades, but I think there's a great opportunity here to buy this if we get down to the 3270 area, which is the monthly pivot, where you see it just lines up really well with a lot of these recent highs as well. Okay, so from October 26th, November 8th, and Thursday. So all three of those days had those highs right up in that area. It's the monthly pivot. And it's just eyeballing it, probably looks to be about a 50% fib retrace as well from this little Wednesday's lows. Okay, so it's actually lining up really with the 61.8% retrace, right? So if you're a fib guy, you got fib levels. Even if you're not a fib trader, right? Here's one thing that you guys should always understand. Learn how to use other traders' tools, not because you need to use them to create your game plan, but just to see if there's other levels of confluence. Like, are other traders that do use those tools going to be looking at the same levels as you? The more confluence there is, the higher the probability your trade's going to work. So 3270, that monthly pivot, let's just zoom in here. Yeah, you can just see how, look at resistance. Yes, it got above it, but came back below it. Resistance, now we're above it. Any kind of flush down into that level, I think, is going to be a good bounce play for MP. Next idea on this list is NVAX. And dude, this thing's been super weak. You can see it's just been getting pummeled, but this little formation down here, this little base it's been building, it's just been curling higher lows. I think it looks like it might be ready to have some push. And remember, it's from a sector that I think has been behaving very well for the longs, XBI. So what did I write down on this? NVAX 20-day, basically. Any kind of flush into the 20-day, which lines up right there with the monthly pivot as well. So 21, a flush down to 21 or a little bit below for a bounce play on NVAX. OVV. I don't think it's ready yet. I think it's sometime later in the week. I think any kind of flush down in the 52, the 20-day monthly pivot, and this little uptrend line. I just think that it's been behaving really well. I think it looks really good. Thing is, this is one of those ones where I could see it probably not ever giving us a play. It could easily just, this breakout could hold. It could just stay above these levels, pullbacks, into this 56.50 to 57 area could hold, and it could get a leg higher, and then I'll never touch it. But if it flushes down to 52, I'm going to be ready to scoop that for a bounce. Last idea in this list is Square. And I'm almost always short bias on this name. I think it's ready for, just looks like it's ready to go. I think pullbacks into, what did I write, 65.50. Yep. And this is the one where, when I was looking at this, what time frame was I looking at when I saw those 65.50s? Doesn't matter. I mean, it's pretty obvious right here. Resistance, support, once it took off, it's gone. Any kind of flush down into 65.50, I'm going to be bouncing Square. And remember, guys, keep in mind that if you guys haven't familiarized yourself with the way I trade, make sure you understand that I'm wrong all the time, but I manage my risk very, very well. In fact, we touched on this last week when I was doing the recap, or the teaser of the recap from the 1-year anniversary of tracking the data. The system I trade is right 45% of the time. So a flush down to 65.50, Ricky takes the trade. But if it breaks below my risk level, Ricky stops out and doesn't give two thoughts about it. Meanwhile, other people that watch the Sunday prep that don't understand this, they got to have their own plans. You got to be able to manage your own risk. And I'm not here to babysit and hold hands. I'm here to give you guys ideas, tell you what I will be looking for, but you guys have to manage your risk and execute. And that's the key. All right. So 65.50, I will try to bounce Square on an emotional flush down into that level. That's it for the strong stocks looking for continuation. There are no stocks that really fit the oversold reversion setup play that I personally like. So there's nothing in that section this week. So the rest of the prep is all short ideas. First section is weak stocks looking for continuation. Airbnb is my first name. Airbnb, what did I write down? 115 to 116 parabolic. Obviously, I see the monthly pivot up there, and there's also these highs up here, right, into this 119 area. Those levels are definitely in play if we get through. But I really, really like that 115 to 116 area. And remember what we were talking about earlier, right? Look for these uptrends where you're, objectively, this here is higher low, higher high, higher low, higher high, higher low, higher high. Where does that change, right? Well, it changes. Here's your first lower high where this line was drawn. But the break was this area here, right? You guys can clearly see that. Okay, this was where that trend changed. This is where we started breaking down lower highs, and then the push to the underside was what stuffed. We haven't really retested it since back here in late October. So, we're trading 109, 110. This thing pops 5 to 6 points off the open Monday and gets extended. I'm there 100% in that 115 and 116 range for the fade. Okay. It's a day trade too. Make sure you guys understand that every one of these ideas so far that I've talked about actually, I don't want to say all of them. Some of those ideas from the long side you could probably leave runners on, but these short ideas are all for day trades, guys. For quick parabolic pops into these levels, I'm taking my slice of the pie and moving on. The next idea is CRWB, CrowdStrike. To the 20-day, and annual pivot is the level I'm looking for. So right up into that, and it's also psychological 150 round number, right? So anywhere in the 149 to 150 area, any kind of parabolic push off the open on Monday, tomorrow, I'll be there for the fade on CrowdStrike. DOCS, like I said, I'm going to try to keep this moving. 20-day slash 200-day, not 20-day, 200-day slash monthly pivot slash key level that we have not retested since way back in August. Now, this one is not typically one I'm a big fan of trading, but because it had abnormal volume because of the earnings, Monday and possibly Tuesday, if the liquidity is still there, I'll still trade it. But once the liquidity dies down, I hate this name. It's typically one that's on my do not trade list, unless the move is obvious and the liquidity is there. So right now it's fitting the criteria. We'll see if it remains that way. If, like I said, this is hopefully for a Monday trade. Okay. NET is the next idea. 60 for a short. Yeah, basically just lines up with that quarterly pivot and that recent high where it was a failed breakout. See this candle right here? Here's the break, right? Push above, slam down, sold off. So any kind of push back up into these levels probably got some bag holders. So I'm looking for any kind of pop up into 59 to 60 on NET for the fade. Keep in mind, NET and CrowdStrike, very similar in the same sector, very similar businesses. So you might not want to have both trades on at the same time. Maybe you prefer one price area better than the other, right? It's kind of like personal preference. Maybe you want to trade a $50 stock versus a $150 stock. Next idea is PayPal. 95.60 for the fade on PayPal, which is just these recent highs. Last month's monthly, you have the annual pivot right there at 95. 95 is going to be a psychological round level. I just think this level right here looks very, very black and white. Okay, any kind of pop up there, and I'm looking to fade this. I mean, it's just been straight up since the earnings sell off, and you got that failed breakdown, right? So that's PayPal's idea. The next idea is Snow. I think I've had this one on there before, the same level, 169. Okay, quarterly pivot, 50-day, has had a big move up. Any kind of pop into that 168, 169 area, looking to fade Snow. Next idea, Twilio. Now I wrote down, I hate this name, but this level just seems so obvious that I feel like you'd have to be short a chromosome to pass this up. And that is 64.80. Okay. I mean, there's so many levels here. I feel like you probably could be looking to fade this into 62, but I think it's just the fact that I hate this name so much that makes me want to see the gap fill first. So up here where it had the big gap down off the earnings, monthly pivot, 20-day, any kind of pop that gets extended up into that level. Now, granted, that's 10 points away and it's got a 5-point ATR, right? So might not happen, but I'm not going to ignore it if that were to unfold, guys. So 64.80 is the spot for me on Twilio. Again, names like Twilio, where it's on my do not trade list, the only way you're going to get me to take a trade on something like Twilio is if it just gets that extreme, right? So something that has a 5-point ATR, maybe it gaps up into the 57, 50, 58 area range and has to push another 6-7 points, which is already past its typical ATR, into key levels. That to me gets me involved in the trade, even if I hate the name. Last name in this section is U. So a hard pop to 34.60 has my interest. Right up here into this level that I've got drawn out for you guys. Where did that level come from? Well, look, here was where we had this push that tried to hold, failed breakout, and then that basically under this was the trigger to take it lower, right? I don't know if you guys can see that, but that was right there where that failed, and we've not retested up into those levels since. So again, another one that's still trading much more liquid than typical because of the earnings. I think the liquidity will still be there on Monday. I definitely want to keep an eye on this. This is one of those ones where it has more levels above, right? So if the level I like doesn't work, the next level above is going to be the highs of that failed breakout day, right? Which puts you right into that weekly 20. So right up in that 37 area. Let's see. Let me look at the candle here. 37.08 was the high of that failed breakout day. So if 34, what did I say, 34.60? Yeah, 34.60 doesn't work. 37 is the next area on U. And so for the next section is overbought reversion setups. There's some that just are screaming right now. All the chip stocks are getting pretty crazy right now. This is AMAT. AMAT 118 is the first level of interest for me. Basically, just looking at these highs in this area over here where we broke down, retested. So support, get under, resistance, haven't retested yet. But as you can see, there's clearly levels above that I still like as well. So 118 is that first level. 123 to 124 would be the next level, but the higher the better. I always think that in terms of this particular section of the Sunday prep is that I don't want to pick a top. I just want to see it get as extended as possible and then just show me the ability for it to put in lower highs, showing me that it's exhausting itself, right? The next one is BX. BX, I'm looking for 115 to 116. It's funny, that's the same levels as Airbnb, right? So Airbnb and BX, I'm looking for 115 to 116. Again, here was your little uptrend, higher lows, higher highs. Where did that end? Well, here's that last failed breakout, lower high, and then here was where that cracked, 115 to 116. Could probably just call it, let's see, coordinates. 115.88 is what I actually have marked to the penny, okay? Next one is kind of a duo. Remember we talked about XLB. Whoops, if I could type. The material sector, right? Well, what two names are in there? FCX. Look at that. Look at that daily candle on Friday. That is an extended move. That's an ugly, ugly candle. It's hard for me to think this doesn't have some reversal, some retrace of this big move up. And I'm including AA with it. Both names, both AA and FCX, I'm looking to fade versus Friday's high. So any kind of pop, and if you delve into their intraday time frames, remember they had news, right? This was pushing all day. Here's your little failed breakout, lower high. This is that, 50 is that psychological round level. Any kind of hard push into 50 Monday morning on AA is a big short for me with risk over Friday's highs. And there's two names I didn't put in the Sunday prep list this week. I'm probably going to throw them in here because, when we look at something like FCX, and I'm talking about this daily candle making it just stand out to me, there's another sector that had a similar look to it, and that was the solar sector. And SPWR and Run, I believe it was, both had these ugly daily candles. I like SPWR a little more, especially with Thursday, the break of Thursday's high, and then the complete failed breakout, right, and roll back over. So I think there's some levels you can play against here on SPWR, particularly this 23 area. As long as it doesn't gap up too close to there, I'd look for any kind of push back up into 23 up to 23.40. 23.40 is where you got the reversal on it right there. Okay, so throwing that one in as an added bonus, as if there wasn't enough names on the list this week already. Let's see if there's some questions. Actually, I don't know why I switched to this view already for you guys, but let me go to the questions real quick and see. I'll probably have to go back to the charts. Hold on. Can I touch briefly on how these individual numbers may affect markets? Should traders expect big moves after every economic number, or do different sectors react differently? Some of them are obviously have more of that knee-jerk reaction. It's more so just about like the key ones are the PPI, the CPI, non-farm payrolls, the jobs report. Obviously FOMC, which is midday versus a lot of these other ones which are pre-market. The good thing about the pre-market ones, and sometimes the ones that are a little bit earlier in the market, whether it's 9:45 in the morning or whatever, is especially the pre-market, you don't have to really give two craps about it. You just have to be aware it's coming out and then watch for what the reaction is, and then make sure that it doesn't ruin any of the ideas that you had already planned for that day. But yeah, definitely some numbers will generate a more directional bias than others. In fact, if you go and look at the list of all the economic numbers that come out throughout the week, the vast majority of them have little to zero impact on the broader market in terms of like size or impact, right? Like there's only a few that really can move the market, and obviously that also depends too a lot on where we're at in the market, right? In this bear market, right, where everybody's just thinking we're heading lower and a lot of negative sentiment, you know, a lot of times people are just really looking for a reason to get bullish and put money from sidelines back into action. And sometimes, you know, the numbers have more gravity than they do, I think, in these bull markets. All right, so Yogi is asking a question. He wants me to go back to a chart. So we're going to go to the charts and look at GD. Liking for a quick scalp long, interesting area at 238. Let's look at GD. Oh, man. All right, so Yogi already knows the answer to this one from me is going to be that I don't trade this one just because the liquidity is below 2 million shares per day. But I'm just going to look at it objectively and look at the levels. That 238 that he's talking about. Yeah, I can see it. I personally, if I was looking to trade this thing, I'd still probably want closer down to this 231 area. But, you know, there's probably plenty of levels to support here. I mean, it just broke out of this flag here. I mean, if we look at a weekly chart, it'll look a lot more obvious, right? So here on the weekly chart, you guys can see how it's just been surfing this weekly 50, right? And just coiling up here. Now we're above it. And so like that 238 level lines up perfectly with a retest of that. But first thing I notice when I look at this weekly chart is that weekly candle is hideous. That to me makes me think that it's just that weekly candle alone makes me think that it's going to come back in a bit. Where it wants to come to, not sure. Definitely have some levels that stand out a lot better on the weekly chart than the daily, right? So this 235, 236 area, actually, I guess it's closer to 237. So, you know, anywhere into those areas, be watching for support to show up. Below that, I'm going to be looking at the weekly 20 if I were to trade this. Again, I probably won't trade it just because of the liquidity. But I know Yogi pretty well, and, you know, he's a really great trader. And so I know he's got his bases covered. He also wants me to look at PBF 43. Yeah. Maybe even before then. Another one where I probably want to look at a weekly here. Just so extended. Here's what I'll tell you right now on the weekly chart I'd be worried about is I would not want to see a break below here. Why? Because we're extended on the weekly. Here's your high. Here's your lower high. And so a break back below not last week, but the week before's lows could send this tumbling all the way back down to the weekly 20, right? So if I was going to play this, and what was the level he wanted to know? 43? Yeah, so you'd want it to stay above that 43 area for sure. That, like, just in terms of trend, right? And again, remember what we were talking about earlier is like we can draw trend lines, and that's hella subjective. But objectively, this has been getting, you know, this is getting really extended up. And this is objectively how a trend reverses, is by making a lower high and then a lower low. So let me get my brush tool and just, you know, push up, lower high, and then we break that. That's how we get back down into these levels down here. But again, Yogi's a smart guy. He's a good trader, and I know he's got his bases covered. I don't have to babysit him. Make sure you guys understand that as well, right? So again, when you get into the daily chart, now you can really see it, right? Here was that high. Here's that pullback to that 43.20 area or whatever. And here's that lower high. It's not a lower high until we lose 43s, right? Which is almost guaranteed why Yogi's looking at that area as a very important level to see if it holds. Let's see if there's any more questions. Regards to the move and then the pivots, do you usually put an order in front of the pivot or behind? I know it's probably how the move is going at the time, but I know you have some orders in. I try to enter at the pivots depending on the price level, right? So the cheaper ones, I don't pick a top, right? Like if it's a $100+ stock and it's ripping parabolic or flushing emotionally down into levels that I personally am looking to get long or short, I have hotkeys that will put me in with set risk and it'll calculate my position size for me. Full size, one entry, let it play out. And I'm trying to get in at the pivot. If it's a $40 stock, I'll typically start looking at the lower time frame charts, like a 1 minute chart, and trying to identify signs of exhaustion first before entering, because a lot of times they'll rip right through pivots and I can actually get much better prices by just being patient. So hope that answers that question. Steve, that was Steve. ZZ, looking at 2 3D short swing fades. Oh, 3-day, I guess he means by 3D. 2 to 3 day short swing fades on BMY and GD if they push higher on Monday or Tuesday. So we just talked about BMY. Let's look at, we just talked about GD. Let's look at BMY. Here's the thing about, and so first thing, let me just be blunt, right? The first thing that stands out to me when I look at BMY is that it's already had an emotional sell-off, right? Thursday and Friday, while the whole market was ripping, this thing came falling apart, right? So, this big move up was getting extended. You had a failed breakout. Here's another thing to point out. So you had that failed breakout right here on, Wednesday. Wednesday, failed breakout, and then Thursday tried to push up there again, got stuffed and sold straight off, right down to the 20-day, which is typically how, I would be looking as targets if I was short. So it's already given the target. Let me see what the level you said on a push higher. Yeah, for me, the move's already happened. For me, now this has been a strong stock that was kind of trending, especially when we start to look at like higher time frames and the sector, right? Remember, and look at the pullbacks have been to these key levels, okay? So you've got this stock that on a weekly chart has just been building. Now we've pushed above this key level, we've pulled back, and what did it do? It gave absolutely beautiful long setup right here with that pullback to make the low, the higher low, and then this break right here, right? So that was the long trigger above here. It went to the target, and now it's pulled back and it's retesting those levels. So, it's been a strong stock. I think the lower it goes, the better it looks for dip buys, but I don't know about a short because I feel like the move already happened, in my opinion, okay? Again, the other thing to keep in mind is it's part of XLV, the healthcare sector. And I guess you could probably argue that it fits into XBI as well, right? So both sectors are sectors I think have been acting really strong. So I'm not trying to short a stock in a strong sector that already had a big move down. Hopefully that makes sense. And then GD, we already talked about it, but again, another one that I think already had the move down. Think about like all the stocks that we talked about in the short section for weak stocks looking for continuation. Like look at Airbnb, look at, and I mean, there's so many names we can go look at right now, but Airbnb, CrowdStrike, NET, these are stocks that are not strong, right? They've just been in these downtrends and now they're popping back into levels of resistance. Those are the kinds of things I'm looking to fade because one, the path of least resistance has been down. Now they're pulling back to resistance. I know it sounds weird to say pulling back when something's pushing up, right? But if you flip the chart upside down, right? Now all of a sudden it looks like a BMY chart, right? A strong stock that's pulling back to support, right? So make sure when you're like, for me, in a bear market, the easiest things to short are the ones where the market agrees with me and they've just been in these downtrends. They're just giving us good entries. So I hope that helps with those, okay? Ricky, coin had a strong move Friday after a push down on the open. 20-day not too far above. Any eyes on it? I have eyes on coin every day. The thing about coin is that it's and honestly, listen, so here's the thing. This is like the most bullish candle I've ever seen on a weak stock, right? So it's been weak. Let's just draw this out real quick here. Low, higher low, and it triggered the long on the same day, right? A break above Thursday's highs was the long trigger. and it was strong, super strong. The only thing that keeps me from looking to buy the dip on this is the sector. It's part of that crypto world that is just being decimated this whole weekend. So like, dude, honestly, I wouldn't be surprised if we wake up tomorrow and this is like gapping down huge. I could see that being a high probability thing happening. Wake up and this thing's trading sub $50 and it closed at 57. If that happens, if we wake up and this is trading well below Friday's highs, oh god, I hate when they show on the time frames. I don't want them to show. Let's get rid of that from the 1 second. So if this were to open up below here, where the dip buy happened on the 5-minute 20 on Friday, everybody, and that's a lot of volume, right? It traded a lot of volume on Friday. All these people are bagged. So we open up down here in the 50s. I think any kind of push up into 54, 55, probably a good fade, just because of the psychology of people that are stuck in that, right? But the fact still remains that it's the main reason I'm not stoked or excited to get involved in this on the long side is that sector. Just the fact that it's part of the crypto stuff. And there's all that stuff happening over the weekend. I think, and remember guys, I could be wrong. I don't care. What matters to me is looking for low-hanging fruit. This to me feels like, to quote Mark Cahodes, is that this is like pulling the jaguar from the tree, right? You're gonna, even if you're right, you probably have to put up a hell of a fight. There's a lot more low-hanging fruit in my opinion. So, but I trade this almost every day on parabolic moves up and panic flushes to the downside because it's always got liquidity and range. It's a great trader. Don't get me wrong. Benito says, Ricky, can you give me thoughts on Ethereum? I can go look at it. I haven't looked at it in a minute. Let me see. I got a whole crypto watch list here so I can see it. My thought, okay, well, I haven't looked at this chart in forever. The first thing that stands out to me is I can't believe it didn't break these lows. It's trading well above the same lows that Bitcoin broke, right? You can see Bitcoin, it snapped those lows. Ethereum, it didn't. And again, I probably sound like an idiot because I am not I'm not the guy to go to ask questions about the workings of the cryptocurrency. Like, I don't even know the difference really between Ethereum and Bitcoin. I just know they're both cryptocurrencies, right? So let's start looking at higher time frames and let's just do this. Okay, so first thing I noticed, from the lows, push into the weekly 20, okay? Weekly 20, lower high, lower low. This was your short continuation trigger right here when we broke that. Right now, this is just the author trying to either resolve to the target, which is these lows from here, because this is how stock trends continue. We can flip this upside down. You would see that's the perfect long setup, right? Pullback, higher low, and then the break. This is really just giving you the ability to get better prices right here with an unhit target. We still have this target right here to get to. And all that's happening right now is the author, Price, is trying to get to that target. If they don't get there, above this is your long trigger because that is where the short fails. Okay, so and if you look at a monthly chart, it'll stand out. Okay, because on a monthly chart, that's how you end up with a reversal. Okay, so you see the pullback, the push up, the higher low. The break above these levels is what can get us back to the monthly 20. Again, I'm just reading this technically, right? So this to me looks like the author's trying to hold trend. The path of least resistance is still to the downside. But I gotta admit, I am pretty impressed that while Bitcoin cracked this level down here, Ethereum didn't. I hope that helps, Benito. Yeah, these are TradingView charts. Mike. Okay, I don't see any more questions, and I really feel like dog poop. So I'm gonna call it here, guys. I love you guys. Thanks for joining me for the Sunday prep. Hope you guys got some kind of good value from it, some takeaways. Again, join TrueTrader if you're not over there. If you don't understand what I'm talking about reading trends and stuff, that's what we talk about there all the time. If not, I'll see you in the markets on Monday, tomorrow morning, and I hope it's not your money I'm taking. See you guys later. Peace.